Zacks Screen of the Week, an overview of a timely stock screening strategy aimed at helping you produce more profitable investing results. Explosive stocks under $10. That's what we're going to be screening for this week with Kevin Matras, our top stock screener here at Zacks.com. This is interesting now because people, investors for whatever reason, individual investors I should say, are always attracted to stocks for $10 and under. Right?
Yeah, they are. First off, let me just say this is kind of a departure from the typical screens that we will do because I normally put in a price threshold of $10. Kind of just a personal preference. But I do at times scan for stocks under 10. I'm kind of doing that right now. I'm running a screen, so I figured now would be a good time to talk about it. But yeah, there is an allure to stocks under $10. Buying a cheap stock, seeing it skyrocket, very exciting.
Yeah. You've got it sorted out here into three different categories. First one being penny stocks.
Well, yeah, you know, a lot of investors will actively screen out penny stocks. And I think that is because of their speculative nature. Oftentimes you will see penny stocks have kind of wide bid-ask spreads. And also, too, a lot of times it can come with it excessive volatility. And a lot of investors would prefer to stay away from that kind of scenario. But there are penny stocks that can and do perform spectacularly, and I think that is what keeps people coming back to that group. And when you think about it, you know, seeing a stock make a 100% return or a 200% return from a 50-cent base, it only has to go to $1 or $1.50. But seeing a stock make a 100% return or a 200% return from a $50 stock or a $100 stock, that just seems like a much bigger deal. I mean, Apple would have to go to $800 if you wanted to double your investment in Apple. So the idea, and again, whether it's mistaken or real or true, the idea that a 50-cent stock can grow to a $1 stock, that is what people believe, and you do see that happen.
Next, you have stocks under $5.
$5 is another common threshold. One of the main reasons why people will look for stocks over $5 is because a lot of institutional investors won't even consider a stock if it's under 5. And since institutional investors have the greatest impact on a stock price, making sure that these stocks can, you know, stay on their radar screen so institutional investors can actually get into it, that's a plus. And so if you're looking for your stock to potentially have some increased demand, spectacular buying, and have it really be out there in the public, making sure that those investors have the opportunity of buying those stocks, that normally is a good thing. And again, if you're looking at stocks over 5, that kind of does put it into a different category as opposed to stocks under $1.
Then the other group was just simply stocks under $10.
Yeah, you know, that group pretty much encompasses the first two groups, you know, under 1 or under 5. For me, I will typically put in a $10 threshold, simply because it's a personal preference. I do believe that in general they are less volatile, but that doesn't mean that there aren't any good stocks under 10 bucks. Now, some people will say that if you're looking at cheap stocks, they're cheap for a reason. And I understand that argument. You know, a cheap stock is cheap because nobody really cares about it. But sometimes they're just new small cap stocks that nobody has really heard of yet, or they're just now, you know, starting to gain sales traction, this kind of thing. But I have, in the past, I have picked up many exceptional stocks under $10 that have done pretty fantastic. So I do find myself occasionally throughout the year screening for cheap stocks. Maybe because this is the end of the year, going into the new year, I'm doing this a little bit more.
Bargain hunting.
But yeah, there's a lot of great opportunities. And I think one of the reasons why I actually have had success, which is kind of interesting, I don't do it a lot, but every time I do it, I have a lot of success. Maybe it's because I use it sparingly, or maybe it's because I'm just ultra picky on the stocks. But I'm hoping to recreate that magic again for 2012.
Well, show us how. Lay out that screen for us.
All right, let's go to a couple of slides. All right, of course, since we're looking at stocks under 10, the first parameter, Terry, is the price has to be under $10.
Sounds reasonable.
Right. The next one, though, is I am looking at the average dollar volume to be greater than $1 million. What this item shows is it shows that price times volume is going to show you how much money is trading in and out of that stock on a daily basis. So one of the keys when you're trading these cheap stocks, you want to make sure that there's enough volume. By making sure there's a lot of money trading back and forth, you're going to have a tighter bid-ask spread. So I just want to make sure that when I'm moving in and out of the stock, I have plenty of people to be able to buy and sell from.
All right.
The next one is pretty important. I want the weekly volume to be greater than the previous week's volume, and I want this scenario to be true for any 2 weeks out of the last 3 weeks. The reason why volume is so important is because usually an increase in volume shows increased demand. Oftentimes you will see large investors moving money into that stock. So that is a really good cue that something is happening, and that can help put something like that on your radar screen, especially when you're trading a cheap stock. You want to make sure that a lot of people are getting on board. Next, to help us out here, we have the Zacks rank of less than or equals to 3. Basically, this is just excluding sells and strong sells. Okay. No need to have those companies on our radar. Then I want the average broker rating to be less than or equals to 3.5. So basically you're looking at an average broker rating of an average of hold, right? Up to 3.5 is actually still going to be considered a hold, or better, you know, a buy, strong buy, so it can be a 1, 2, whatever, but 3.5 is the cutoff. Then, since these are small stocks, there may not be a lot of coverage, but I want to have at least 2 analysts following it. One analyst could be good enough, but if you have one guy making an earning estimate, that's just one person. I want to get at least 2 people eyeballing this stock, and I want to kind of see what's happening with the earnings estimate revisions. And that leads me to the last item, which is the percent change in F1 earnings estimate revisions over the last 12 weeks. I want it to be greater than 0. So I would prefer to see the earnings estimates going up, but at the very least, I want to make sure that the earnings estimates are not going down.
And which explosive stocks have come through this week?
Yeah, there were about, I think, like 60 or 65 stocks, if I can remember correctly. Here's 5 of them. I like this group. Antares Pharma, Global Cash Access, Inner Workings, Raptor Pharmaceutical, and TASR International. One thing that's interesting is there are 2 pharmaceutical companies on this list, and one interesting aside is that I saw more pharmaceutical companies come through this list than any other group. So maybe something is happening within that group. But a lot of interesting stocks, a lot of different industries represented, and they meet all of these qualifications. All of these look like they have the potential of being explosive, and definitely worth taking a second look at.
Own any?
Not yet.
If you want to take a look at the parameters again for yourself in text form, then by all means get to Zacks.com if you're not there already watching this video, because there is where you'll be able to link off of our homepage to this week's Screen of the Week in text form. Just scroll down the page till you see Kevin's picture. It'll take you right to it once you click on that headline. And if you want to know more about the Research Wizard, that, as you hear me say all the time, is the tool that Kevin uses to achieve all of these screens, Zacks.com/researchwizard is the place to go. With Kevin Matras and the Screen of the Week, I'm Terry Ruffalo.